Good evening, guys. As promised this morning, here's a video on our trades in Nifty and the logic behind it. All right. So, as always, we have marked the previous day low, previous day high. The black line over here is the weekly low of previous week, and somewhere up here at around 46,250-260 levels is the previous week high. All right. So once these levels were marked, we waited for the market to open. Okay, so as you can see here, this is a 9:15 candle for the day. That is 27 September 23. So market opened here, and you can see it's clearly opened below previous day low. Now, for me, such a day, I would consider this as a gap down move. All right. Uh, some people have different definitions of gap up and gap down, but for me, this would be a gap down move because it clearly opened below the previous day low. Certain people, if the market opened over here, let me just get this sorted out. So certain people, if the market opened here, that is above the previous day close, they consider this as a gap up move. All right, and a move like this down here, pardon my drawing, a move down here like this, they would consider this, since it opened below the previous day close, they consider this as a gap down move. I don't do that. For me, if the market opens below the previous day low, it's a gap down move. Market opens above the previous day high, it's a gap up move. All right. So once this is clear, let's move ahead. So as the market opened below previous day low, okay, as we discussed earlier, it's a gap down move. Now, since it's a gap down move, I would consider this day to be a day where the market would come further down. If not for the entire day, at least for the initial part of the day. Okay. But once the market opened, it made certain moves. I told you people to be careful, try to go short only below 44,430 levels. Now, why 44,430 levels? Okay. Now, the answer to everything on the chart is look left. All right. You don't need to look at any OI data. You don't need to look at any kind of ratio or any other gibberish. The chart itself tells you where your probable support or your probable resistance are. You don't need to look at any other reports. You don't need to look at any other indicator. The chart itself will tell you. Okay. Now, if you look left, okay, where is the next support that we feel where the market started moving up? Now, if you look here on the 25th, you can see the market came down from the 22nd, came down to 25th, and immediately from around somewhere on this level, the market shot up, you know, in a really strong up move, right? So when you look at this area, as in when I say when we look at this area, okay, we got to see a part where the market made an up move, created an order block, and that order block was not visible. So hence it's a virgin order block. Okay, you got to look at that particular order block, not anywhere else. Okay, the last order block that was made, which has not been visited. Okay, so if you look here, this is the last order block that was made, which has not been tested. Why this is the last order block? Because this was the recent swing high before the market came down, and it is this high that was broken by this 1150 candle on the 25th. Okay, so once this candle is broken, it's broken a structure and created a bullish order block here. Okay, now for me to refine this further, okay, for me to get an entry, if you may say, a really tighter entry with a tighter stop loss, what I can do is that I look into a 1 minute chart. Okay, look into the 1 minute chart, go to that order block, and see the same thing. Where was the last order block created which has not been visited? Within this zone. And you can see the last order block over here was created here. Okay. Why here? Again, this is the last high before this low, and it is this high that was broken. Okay, so the last bullish order block was created here. Okay, so now let's look at what did price do at these zones. Okay, today. So market opened here as we discussed, and it came down, and see it kept taking support at this level, at this zone, the green zone and the orange zone kept taking support. Okay, and as you can see, sometime in the morning itself only, I had asked you guys maybe around 9:24, you know, to that we can go short, but be very careful at 44 430 levels because that seems to be a good support. Okay, so why at 9:20 at around 9:20 24 I told you to go short? There's a reason to that. There's a logic behind that too. Now see the market came down, opened here, came down and started moving upwards. Okay, so it made a interim support over here. It is at this point where the market started climbing up. Okay, so what we did is that we waited for the market to come down and break it. Okay, as soon as the market broke this, we have a bearish order block that was created over here. And at around 9, as I said, around 9:24 is when I told you to go short at around this zone. And you can see the market came up, we shorted at around 485 levels. We got good 30, 40, 50 points. We came out of the trade, we shorted again, and again our trading stop loss was hit. So we made decent points over here in the morning itself. And we shorted again. I'll tell you where again we shorted. I'll tell you at what time we shorted again. Just give me a moment. At around 9:38 is when I told you to take another short position. Okay, so 9:38 would be somewhere over here. Is that I told you to take another short position. Okay, reason being, the market came down, it went up, and you can see this candle. This candle broke this zone, these two zones, close below it. So it gave us an indication that the market wants to go down further. There's a good probability that the market wants to move down further. So when this was created, there was another bearish order block being created over here. So at around 9:38 is when I asked you to go short again. We shorted. We made around 40-50 points. We squared half the position, then we held the rest half, and the market crashed down. Okay. Now why I drew this zone? Okay. Now when you look at the market here, this is today's date. We broke down our previous zone that we created, came down further. And why did I mark this zone? Again, the answer is to the left. You look at the chart. So once this was broken, where is the next support that we see on the chart, which has not been visited? You see, this is 25th, the zone that we had marked. After this, there's nothing there. And the next zone is created on the 6th of September straight. So we look at a part where the market comes down and moves up from there. Okay, so this is the part where the market came down and moved up. So I marked this zone as a bullish order block. Now to refine this further, what we did was we go on a 1 minute chart. You go on a 1 minute chart, you come to 6th. This is your interim high. Sorry. This is your interim high. Alright, which was broken by this candle. So once this was broken, okay, see this was the last high that was formed. Market came down, market moved up and broke this high. Once this candle broke this high, this becomes a bullish order block. Okay, now let's see whether the market came here or not. comes down, takes support, comes down here. It's not able to break this. It's finding it difficult to break this. Okay. And in fact, around about this time, me and one of our members in our group were discussing that where the market might head. In fact, he told me that he has a feeling that the market is going to move higher because he's seeing accumulation taking place over here. And I wasn't very sure that point in time because I was feeling that the market might fall further down to this zone. Okay, but as he proved me wrong, the market moved up, and at around 11.1, 11.2 is when I squared off my position. Why 11.1, 11.2? We see this high being formed over here. This high being formed over here. Okay, market made a high, came down, and it broke this high. It broke the structure over here. So at around 11.2 is when I squared off all my positions. Alright, I hope you guys got that. Okay, so this is where I squared off all my short positions at that point in time. Now let me just clear all this now. There was another trade that we all took. I will tell you the reason behind that too. Now you see, before this fall happened over here, which was the low that was broken by this fall? If you have a look over here, the market came down and went up. This was the last low that was formed before the market crashed. This broke this low, correct? This was the last low that was formed before the market crashed down. So once the market crashed down, breaks this low, we have a bearish order block over here. Alright, now I mentioned this up too to take a short trade. I personally didn't take this trade, but I did mention, like, let me have a look when exactly I told you guys to take a short. At around 11.24 is when I told you that there is a short position being created with a strict stop loss of 4485. 4485 will be this level. Strict stop loss of 4485 around about this level. Okay, and I told you guys to go short here at this zone at around 11.24. 11.24 would be somewhere around here. Somewhere around here is when I told you the market comes here, you can take a short position. I personally did not take a short here because I had made my targets for the day. But you can see price came in, hit the bearish order block and crashed down. So one could have easily got 450 levels to 350, easy another 100, 120 points here. Okay, if one was following me and following my inputs, one could have easily made another 100, 120 points here. Okay, the market moved up, and at around 12.55 also, if I'm not wrong, I had placed a message stating that market 12.55 here, market might take another rejection in this zone. It did, it broke up, came down, went up higher. Now I clearly told you guys to go long only and only if the previous day low, that is this line, has been breached. Okay, so I took this trade personally myself. You can see here, this particular candle broke the low, previous day low, as well as broke the previous week low and closed above both of them. Okay, so here you can see a fair value gap and FVG being formed here at this level. I waited for the price to come. At around this level I bought. At around 560 levels or 561 levels I bought, and I squared off at 50 points. I sold half. Another 20-30 points I sold another half of it, and the rest I kept my SL to cost. Price came back, took my trailing SL, but that's fine. I made my money for the day, and for the remaining part of the day, it was trading within this fair value gap. It kept coming down for a brief moment, it broke, but it again climbed up and again started taking support from previous day low and the fair value gap that we marked over here. So this was today's trade. the logic behind it. If you guys have any doubts, drop me a line. We can discuss this further. All right? Cheers.